Herzlich willkommen bij een neues episode of the Wrecked Show. Yes, the title of this video is back again. What are we going to discuss today? Well, I initially wanted to discuss some altcoins today, but I think it's more appropriate to discuss Ethereum, Bitcoin, and some majors, because that's probably the focus we should have right now. If you're balls deep into small altcoins, then I think you are a little bit over risking your portfolio or your trading stack. If you like my content, as you know, please subscribe to the channel, like beneath, or and check out my website if you want to trade alongside me. And also follow me on Instagram. I think we're still basically starting with the channel, but first progress is that we have a new desk at the stock exchange, which you can find on Instagram, through which I'll be able to trade more day trading, swing trading setups, which I'll also be posting on social media and in the group, obviously. So that's the first progress. Second progress is that I'm looking for a new home where I can build a YouTube studio. And then the whole roller coaster of the coming years is going to start. But Bitcoin and Ethereum. First, let's discuss some Bitcoin. We have been mentioning this bearish case in which what we have discussed is that the crucial area was this 11.2 area, which initially is around the previous high, which we have to hold, or we had to hold, in order to ignore this bearish divergence. However, we've got a clear confirmation that we rejected the range resistance again, which was the 12k zone, and since then we just nosedived. And if you zoom in smaller time frames, you can also see that we've tested the support levels many times, and now we rejected at 11.5, which caused the chain reaction south. And I've said that if we lose that level, my initial points of interest are the zones we have here. Mainly the one around 10k, maybe even lower given that we've got the CME gap beneath us still. But anything between 10.3 to 9.6 is an interest zone for me to start longing. So now we've seen that we've had a severe crash down, right? So I saw some very depressed tweets and messages this morning. If you are trading this one through investing, these drops you should be using to DCA. So if you want to, so for instance, you had the opportunity to buy at 11.5, but you did not do that, this is one of those chances you get. If you did use a longing at 11.1 or any altcoin or whatever, and you did not use a stop loss on a trade, which is different than an investment strategy, I think you should be starting by evaluating why you are in pain right now and what you did wrong. As essentially, you should be using a strategy and a plan on every trade according to your risk management strategy. And I know that 99% of you don't have a risk management approach, and that's what's the momentum right now in the markets. Overall, if we get this downwards drop, that's not a bearish case for the markets. It's actually quite healthy, as in any upwards rally, and especially if you go back to the previous one, every previous level of resistance gets tested for support again, according to gain strength and to continue the momentum. So getting the retest in the area around the CME gap is not unhealthy, especially given that we got this whole gap in the upwards run after the breakout, which is likely to receive such a retest, which we are getting right now. So what are you going to do at this point? Well, we've just had the volatility, which often leads to a dead cat bounce, but the bottom construction, like we see, takes a longer period. So a bottom construction like we do see here takes longer before it actually bottoms out. So what's the most likely scenario at this point? Therefore we have to zoom in. A very constructive or destroyed chart, in which you can't really trade too much if you are swing trading at this point. But the levels are still there. So we've got an overextended RSI, we've got some liquidity to tap above us, and we've got some crucial resistance zones above us as well. So in this case, what you want to see is that, okay, well, we've had this wick down, through which this wick was below the previous low and took the liquidity there. So it's very unlikely that we're going to go down again to take the liquidity there, unless we want to close the CME gap in one go. If we do hold here, the crucial area to break through is 10.6. If we do break through 10.6, the next resistance zone is 10.9 to 11.2. So the area or the construction we could be getting is that we're getting a slight rally up, just like a dead cat bounce, like we see in the momentum we do here, in which we test some higher levels for resistance again before we start to tumble over. And then in this bullish perspective, in which we bounce up towards 10.9, it's not unlikely that we tumble back down again to create another low on a 4-hour time frame to get the bullish divergence going, after which we get a new construction, sideways construction, and we bottom out, which we've actually have seen in the area previously around December 2019. So it's not the most likely case for me right now is that we're going to take the liquidity around 10.8 to 11. I'm definitely trading some here. I'm still long on some positions as well. Had to DCA some more. And if we get in these ranges, I'm definitely going to decrease my sizing to be able to provide liquidity if we get such a downwards fall. If we get towards 11k and we drop down towards 10.2, making higher low, that's also a possibility. But if we drop in the ranges, these are the two zones that I'll be looking at for potential longs, and then for the confirmation on the bullish divergence. So if you are down right now, I think you should adapt to a different strategy given the volatility, in which you are trading shorter, in which if we get a bounce like EOS today of 30%, so for instance if we get towards EOS, we can see that we had a severe bounce up, right? So if you get such a bounce up, you can see that we test some levels upward. So in that case, a huge expansion up occurred, after which the same downwards fall occurs as well. And in this case, it drops further down because of the Bitcoin volatility, but it's not unlikely we get something like this. So if you're still in a position and it bounces up with 25 to 30% to test the liquidity above the recent highs, that's the option to sell some stuff partially, which you could be using on the higher low or the bottom test again. And if you use that, the next bounce up, you're back in profit. So in this case, you have to adapt your strategy to a more active strategy if you're a trader, in which you can get your loss back quite fast if you're doing some active trading. Then swipe, which I wanted to see close above red. We did actually close above red, but we couldn't flip because of the weakness of Bitcoin. Went all the way down, and now you want to see sustaining support above 185, preferably above 191. And if we do that and we tap the high again, it's very likely we're going to see a similar move as EOS, in which we're going to test the levels around 250 to 260. And if we get there, we can start zooming out. So in that case, I'll just use the other chart, in which we can get a clearer view if my Binance works. Thank you. So in that case, you get such a dead cat bounce, in which we test higher levels, after which we have to come down for more confirmation, which also lines up with my view of Bitcoin. I do not expect us to bottom out in one go. I expect us to, at least this is the most bullish view, in which we get this high, but we could also be rallying towards 260, come back down, just like we have been doing here. So adaptation, a little bit more active trading, and then you'll be fine. Tomorrow I'll be uploading a new update on a major Saturday on the regular time, which is in the morning. I hope you enjoy your weekend, and Monday we've got a new live stream as well. Take care.